buying or selling a home is one of the biggest financial decisions most people will ever make. And while you're likely focused on things like price, inspections, and closing dates, there's one part of the transaction that often creates confusion: real estate commissions. Who pays them? Why do they exist? And can they be negotiated? In this video, we're going to break down exactly how real estate commissions work, who pays what, why the system is designed the way it is, and how you might be able to save money depending on your situation. Whether you're a first-time home buyer, a curious seller, or just someone looking to understand the process better, this guide is for you. Let's start with the basics. A real estate commission is a fee paid to real estate agents for their services in helping you buy or sell a home. These services often include marketing the property, staging advice, arranging showings, negotiating offers, handling paperwork, and guiding the client through legal and logistical details. Real estate agents often work long hours behind the scenes, and their commission is how they get paid. This commission is typically a percentage of the home's final sale price. In the United States, that percentage usually ranges from 5 to 6%, although it can vary by region, property type, and agreement. This total commission is then split between two agents: the listing agent, who represents the seller, and the buyer's agent, who represents the buyer. So if a house sells for $400,000 and the agreed-upon commission is 6%, that's $24,000 in total commission. That amount is typically split down the middle, so each agent earns $12,000. Now here's where things get a little more interesting. Who actually pays this commission? Most people assume that each side pays their own agent, but that's not how it usually works. In a typical transaction, the seller pays the full commission, which is then divided between both agents. This means the seller is responsible for paying the buyer's agent as well, even though that agent is working on behalf of the buyer. Why would the seller pay for someone who's not even on their side of the deal? Well, think of it like this. When a seller hires a listing agent, they agree to pay a total commission. The listing agent then offers a portion of that commission to any agent who brings a qualified buyer. This creates an incentive for other agents to show the home and bring in offers. The more agents who show the home, the more likely it is to sell quickly and at a better price. From the buyer's perspective, this setup is actually a huge benefit. It allows them to have professional representation during the process without having to pay out of pocket for it. Their agent gets paid from the transaction itself, not from the buyer's savings account. But the truth is, even though the seller pays the commission, that cost is typically built into the sale price of the home. So in a roundabout way, the buyer is still covering the cost, just not directly. Let's say a seller lists their home at $400,000, anticipating that they'll have to pay a 6% commission. If they didn't have to pay that commission, they might list the house for slightly less. So the final sale price reflects the fact that commissions are part of the cost of doing business. Now, you might be wondering, why is the system designed this way? Why doesn't each party just pay their own agent? The current model exists to make the transaction process easier, especially for buyers. Imagine being a first-time buyer and having to come up with not only a down payment and closing costs, but also a few $1,000s in agent fees. That would put homeownership even further out of reach for many people. By having the commission paid by the seller and embedded in the sale price, buyers can finance their agent's services through their mortgage. It's more accessible and more efficient. That said, this model is not without its critics. Some argue that having the seller pay both sides inflates home prices, or that it creates a conflict of interest where agents are incentivized to close deals quickly rather than get the best possible terms. In response to these concerns, alternative commission models have started to emerge. We'll talk about those a little later in the video. For now, let's look at a common exception to the traditional model: for sale by owner, or FSBO. When a homeowner decides to sell their property without using a listing agent, they may avoid paying the listing agent's commission. But if a buyer comes in with their own agent, the seller may still be expected to pay the buyer's agent's share. That's because the buyer's agent still expects to be compensated for their work. If the FSBO seller refuses to pay that commission, the buyer may have to pay it instead, which could reduce interest in the home. Buyers may prefer to look at properties where their agent's fee is already covered. While FSBO might seem like a great way to save money, it comes with risks. Without an experienced agent, sellers can miss critical details, misprice their home, or fall into legal pitfalls. That's why many FSBO sellers end up hiring an agent after struggling to sell on their own. Now let's talk about negotiating real estate commissions. Can it be done? Yes, commissions are negotiable. There's no law that mandates a fixed percentage. Agents may be willing to adjust their rates based on a few key factors. These might include the home's value, how fast homes are selling in your area, how much marketing the agent expects to do, or whether you're working with them on multiple transactions. For example, if you're buying and selling with the same agent, they might agree to reduce their fee. Or if your home is in a hot market and likely to sell quickly, you may be able to negotiate a lower rate. However, it's important to understand that commission reductions can affect the services you receive. Some agents who lower their fee may also reduce their marketing budget or the amount of personal attention they provide. And if you reduce the buyer's agent commission too much, fewer agents may show your home to their clients. A good approach is to ask your agent for a breakdown of what's included in their fee. That way, you can better understand the value they bring to the table and negotiate based on services, not just percentage points. Lastly, let's touch on some of the newer models in the real estate world. In recent years, several companies have introduced flat fee or discount brokerage models. These might charge a fixed amount, say, a few $1,000s, regardless of the home's price. Others offer limited service packages where you pay less, but also handle more of the process yourself. Some online platforms offer hybrid models, combining digital tools with real agents at lower commissions. And some even offer cashback incentives to buyers, essentially refunding a portion of the buyer's agent commission at closing. These models can be attractive, especially in a strong market. But they're not for everyone. If your transaction is complex or you're in a slower market, having an experienced agent on your side can make a significant difference. So let's wrap things up. In most cases, the seller pays the real estate commission, which covers both their own agent and the buyer's agent. That commission is typically a percentage of the sale price and is factored into the total cost of the home. While the buyer isn't paying their agent directly, they are indirectly contributing through the price they pay. This model makes it easier for buyers to access professional help without upfront costs and creates incentives for agents to work together to get homes sold. Commissions are negotiable, and there are alternative models out there, but the traditional structure remains the most common in today's real estate market. If you're entering the market as a buyer or seller, understanding how commissions work can help you make smarter decisions and avoid surprises at closing. Thanks for watching. If you found this video helpful, please give it a thumbs up, subscribe to the channel for more real estate tips, and drop a comment below if you have any questions. See you in the next video.